As a health insurance agent, I call many potential clients and I keep hearing the same thing over and over again.
I'm interested, but I just can't afford it.
But when I get the actual quote out of them, it's usually 2 to 3 times higher than what I was able to quote them. Now, do I have some special insurance product that nobody else has? No. So I started to question, why would an insurance agent risk charging 2 to 3 times more and lose the sale than to just do what's right, treat the customer the way they should be treated, and get the sale? So first of all, every time a health insurance agent sells something, they're going to make a commission. Most of the time, it's a percentage. Sometimes it's a set dollar amount. So the more products they sell, theoretically, the more commission they're going to get. If someone sells health insurance, life insurance, and a dental and vision policy, they're going to get paid a commission for the health insurance, the life insurance, and the dental and vision policy. But what if the client doesn't want that? What if all they want is the health insurance? Well, then the agent is potentially shooting themselves in the foot and charging more, which is going to completely destroy the credibility and trust the next time they talk to that person, instead of just actually giving them exactly what they want. Now, the second reason as to why health insurance might come across as too expensive is usually because someone's coming from a corporate America standpoint to maybe a sole proprietor or working for a small business where you have to buy your own insurance, and the clients don't realize how much their previous employer actually helped pay for the health insurance. So large companies have to pay a minimum of 50% of the premium, and a lot of companies will actually pay more, like 70, 80, even 100%. So if you're only paying 20 to 30% of the premium, then it's going to appear to be extremely affordable versus having them not pay anything at all. Now, I'll be the first person to admit that health insurance does take a pretty big bite out of your budget, but it doesn't have to. By trimming things that you don't need and focusing on the things that you do need, it's very possible to actually find a health insurance policy for a budget that you can afford. Now, it depends on whether or not you're an individual or a family. Looking at things like co-pays, co-insurance, and deductibles can play a huge part. If you're healthy, going after a $500, which is a low deductible, a $500 deductible may not be the best solution because it's going to be a very high monthly premium. Whereas going with something that is a high deductible would actually help keep your costs down if you're not going to the doctors very often. If you or a family member does have some serious conditions or needs to go to the doctors frequently, then you might want to look at a lower deductible, because it means you're going to actually pay less at the doctor when you actually go to the doctor. And if you're going a lot, then it's going to save you money in the long run. Now, let's talk about the deductible for a second. A lot of times, someone who is healthy will want to get a high deductible because it keeps their premium down. But when they hear that their deductible was $5,000, $6,000, $7,000, they get freaked out and they
Think, I can't afford that if I go to the doctor.
Well, you don't need to worry. You're not going to have to write a check before you see the doctor. A lot of times they will actually bill you in regards to the amount owed for that doctor visit. Let's say that you were sent a bill and you just simply can't afford it. The health insurance provider will actually allow you to get on a payment plan to make your payments more affordable. Now, talking about trimming things that you don't need and keeping things that you do need, something like a supplemental accidental policy or maybe a critical illness or cancer, heart attack, stroke supplement may actually be a good thing, because you can actually keep a high deductible plan which will keep your costs down, which will make room for something like an accident supplement. An accident supplement is actually going to give you a lump sum if there is some type of accident, and they will pay you, the person, not the hospital, not the insurance company. They'll pay you that lump sum amount, and then you can take that money and pay your deductible with that. So it is a very wise, smart way, and it's a very popular way that people can actually keep their costs down by still not having to come out of pocket $5,000, $6,000, $7,000 for a deductible. Now remember, you're buying health insurance to protect yourself, protect you and your family in case there's something crazy that happens, some huge illness, not to go to the pharmacy and get a $12 antibiotic, okay? So think about it. It's big picture. It's in case something bad, tragic, catastrophic happens, you have minimized your risk and your liability because you have health insurance. That is the most important thing that you need to take away from this video, is the fact that you can cut things that you don't need, keep the things that you do need, so that you don't end up filing for bankruptcy in case something tragic happens. Hopefully you got something out of this video today. If you did, go ahead and send us an email, like, subscribe. We really want to be able to get feedback from you guys and talk about things that you guys feel are important, so that we can peel back all the layers of health insurance, because a lot of times when you talk to a random insurance agent, they're not going to tell you what you want to hear, but we will. So contact HCIP today.